Welcome to JDMBI.com. This is John. This report is for the 14th, and happy Bastille Day. Well, it's always an interesting thing. You look at market and certain behavioral things that start to change, and it just becomes like an instant, like, whoa, what just happened there? Well, we can see the market breaking out to the new highs. Um, Clearly, reading supported all of this, along with everything that we're seeing from the shakeout. We could see the lower high peaks from before, sucking in the shorts within that, but we also saw from our DSC that shorts had basically vacated the situation, as well as short-term buyers just stopped buying, and that was enough to fool enough people to create the next move higher. Interestingly enough, but you also get at the same time, debt payments for the U.S. will reach $1 trillion now, given where interest rates are, and given the move recently by Russia and OPEC BRIC countries to uh, pump up oil prices, zero interest in the domestic situation. It's going to force a second round of inflationary pressures. I mean, there's really not much doubt in that, unless the U.S. changes policy and decides to, flood the market again with, production, which doesn't likely seem to happen. We can see the Nasdaq perking up, but then you also see the same situation where they're having, sluggish results from everything, and then you get crazy moves again like this from the bond market. Uh, their earnest belief that either they have to put their money somewhere other than the market, which lowers yields, or they believe that there's some kind of imminent economic decline that's going to take place. Now, of course, everyone's been talking recession for since a year plus, and have been wrong. They just haven't been able to read the metrics right, and that's supposed to be because of the manipulation that takes place. But at a certain point, um, those predictions will come true because there are just natural cycles in all things. And when you add to certain pressures, you certainly can do that. When we see what happens now with credit card delinquencies, credit usage, whether or not people have the sustained ability to do things, um, price shocks will then create an exponential adverse impact. So this significant press in oil prices just within the last week um, certainly is going to be problematic. Now, are we in a critical area at 76? No, but the closer you get to 80, you get into these other artificial areas where the U.S. and the Western allies, in their infinite wisdom, decided to put price caps on Russian oil and its availability. And while price was under those caps, it didn't really matter. But as you get to these levels, it becomes an issue, and whether or not that will further reduce supply, forcing even greater increases. A lot of that was handled through black market transactions that went through third parties, but um, that's an interesting one because would it normally, trigger such a commentary by me? No, when you see ridiculous things like this with the euro spiking so dramatically under the pressure that the eurozone is facing and horrible economic, what the eurozone is going to increase rates. What's the justification for this other than fine? They wanted to keep it within that upper range, but um, bizarre. And when you see kind of bizarre things happen, you have to ask yourself, has something changed? Has something gone a little weird? Fine, yes, it was in by configuration from the breakout there, no question about that. But this kind of exponential move within a currency block that isn't doing well overall relative to the U.S. growth, and that unusual is an understatement. I mean, clear cyan under red. Fine, it's all on positive extremes, so at some point it will feel back. It's just unusual when you see something like this, where gold, if these pressures were, significant, should have skyrocketed as well, and then you get the corresponding partners in cryptocurrencies making a spike. So what? Everyone woke up and decided, oh, let's jump into cryptocurrencies over precious metal. Strange. Um, just worth noting. Not that we didn't see the rising gold. I mean, we were expecting the crypto to stay near the 100% range. There was no imminent reason for them to do anything otherwise. But um, just interesting when you start to have all these corollary effects put into place. And so, some of the new economic data I think that's going to be coming out as we move into the summer, it's going to be critical. How sustainable, you know, is where things are at as far as the economics and things. I mean, obviously, everyone has been talking about the absurdity. It's the question of which straw is the one that finally triggers things. And obviously, the credit event will be the most likely telling thing. Now, the Fed's been very good at handling those. Obviously, we had the banking issues, and you have now the overnight swap trade that takes place. But it's just interesting, um, given what we've been looking at from a behavioral standpoint. When you see significant changes, it's not that the crowd changed its mind, it's that the players that can make things move change their mind. And that's always worth noting. From our standpoint, 50K, spot on with all of it. Not a real issue as far as the readings goes. All fairly clean and pretty strong from a overall view. It's just now you're starting to get some of the corollary trades not matching what's taking place in the market. And obviously, we've talked about this, that the market is going to rise simply as a default mechanism to inflation. There's that element of it, but there are definitely going to be some hiccups along the way, particularly when you get into a situation where are we going to see some type of contraction globally and or even from a U.S. standpoint. Intraday, you can see this was just fairly clean action. Simple run-ups and not a lot of it under positive extremes. So there's plenty of money flowing in. This isn't like they were pushing some, button to just really like throw people off. So we've got just some interesting dichotomies taking place, and I think they're worth noting, just so you pay attention, because I think that's where you get some of these black swan, crazy Ivan kind of events where things just randomly shift, and you want to be prepared for it. And we're going to see it obviously in the readings, but in some of these cases, you're going to have to pay attention to the shorter term readings to really be on the front edge of that. Certainly by the time it takes place in a 50K, you could have a significant move when we're starting to look at some of these broader intraday moves. Definitely worth noting. And this was some of that volatility that I had talked about would definitely increase. And I think it's going to be a little more challenging to decipher the net effect of some of the information that's coming out. Obviously, when a government can print endlessly and has just interest payments of over $1 trillion a year, there's some interesting stuff there. Definitely worth an entire, constructive discussion on, and how it's, you can accommodate it, and how relevant is it? Is it more for show? We always knew this would be the case once the Fed started raising rates. It's just, when it actually becomes a significant portion of a budget, and how do you move forward with that and still allow oil and things like that to move outside of ranges that keep inflation and or wage pressures primarily. Definitely have to be kept tight in those situations in order to allow you to continue, because if there is the intention of raising rates, what do you do when your debt goes to 1.5 trillion a year versus a budget of what you're already spending in $1 trillion deficits? The math doesn't make any sense. But some people would argue the math hasn't made sense for a long time, but you can make these things work when there's reasonable economic growth. The question comes, when that starts to slow down, how bad does it get, and where do we fall from there? So that would be things we look into in the future. But I just thought I'd point these things out because there's some unusual movement in the last day plus there. So it's worth just at least putting it out there, and you can make some assessments from there. It doesn't change what we can do intraday as far as the readings are what the readings are. You trade them as they come, and that is what it is. So all things being equal, just thought I'd throw that out there. As always, though, continue to trade well, and have a good one. See you on the Skype chat.